this week, we saw the GDP figures for South Africa, and it indicated that the rand strengthened, riding on a better than expected growth of the economy in the first quarter, while a surprisingly large rate in Australia heightened global investor caution. Data also shows that South Africa's economy recovered to the level it was before COVID-19 pandemic, and that's in spite of some of the incidents that have taken place there. Well, we have Matt Kindiger now, practice lead SSA Front of View, joining us now to help us understand how South Africa has been able to achieve this in spite of some of the incidents they've had. Hi, Matt. Good afternoon.
Hi, good afternoon. Thanks for having me on the show.
Good to have you. Well, Matt, just before, this is unexpected because they've had the flood, they've had, the other incident that really took them back. They had a huge setback with COVID-19, and yet we see them going back to the pre-pandemic level. I don't think a lot of people saw this coming.
Yes, well, I would agree. We were not expecting, well, if you look back about a year ago, we were not expecting the South African economy to reach its pre-COVID level until 2024. And this is because the fundamentals for the economy were pretty weak. And, we did see the floods and the unrest last year really hampering growth in our view. But actually, a couple of factors have contributed to more upbeat growth than we were expecting. So the economy grew by 2.6% in the first quarter this year on a year-on-year basis. That's, not seasonally adjusted. And there are a couple of reasons for this. One is that the services industry has done actually very well. It's exceeded the overall level of economic growth. There are a couple of specific industries. So transport and ICT have done very well, grew by about 6%. This reflects a sort of continued reopening of the economy, an increase in travel, both domestically and internationally. But also the ICT industry is following a trend that we're seeing across sub-Saharan Africa of one of booming activity. And this is partly related to COVID, but also because of new investments in the sector. But crucially, what we've seen in South Africa is very strong credit growth that has supported private sector activity. Interest rates in South Africa remain close to record lows. So they were cut by the South African Reserve Bank during the onset of the COVID pandemic to support the economy. And we have seen a sort of delayed effect in terms of the benefit on borrowing. So costs of borrowing have been very low. Households, businesses have taken advantage of this to invest and spend, especially on services industries. So really it has supported that. We've also seen quite upbeat exports demand and better than expected government spending. And this is because of very high commodity prices. The government has been able to avoid the worst of its austerity measures as we were previously expecting. So the government has, delayed spending cuts and also delayed tax increases. So this has provided some relief for the economy in the first quarter of this year.
Yeah, so do you see this trend continuing? Looking at the outlook now.
So yes, in terms of the outlook, we actually have recently revised up our growth forecast for South Africa in 2022. We were previously forecasting about 1.7% for the full year. Now closer to 2.5 or 2.7%. And the first quarter data really validates this view. And this is because global commodity prices are now expected to remain higher for much longer than we were previously expecting. South Africa is a huge exporter of iron ore, gold, minerals, and demand and prices for these exports are really going through the roof. They will remain higher for longer because of the Ukraine conflict, which in our view will last well into 2023. So South Africa's exports will benefit. We'll also see lingering benefits on public finances because the government's royalty revenues from the mining industry in particular will benefit. But the outlook for 2023 and 2024 is a lot less certain. We are expecting growth of only about 1.2% in 2023 and the next couple of years. So we're expecting a slowdown because as commodity prices begin to ease, especially in the second half of 2023, and interest rates continue to increase, so the South African Reserve Bank will be consistently raising interest rates over the next 6 to 12 months, in our view. This will begin to choke off the very strong credit growth that we've seen in the economy. We also have, power shortages and rising inflation and a weak tourism outlook, which will also
exactly.
constrain.
Yeah, I mean, the power shortages in ESCOM and all of that, that's also another level. But what about the rand? We see that it also strengthened. Do we expect it to continue performing that way?
In short, yes. So we do expect the rand to remain strong and quite stable for the rest of the year, although we can't rule out some volatility. There are many factors that will be pulling the rand closer or strengthening the rand over the next 6 months in our view. Firstly, export revenues, demand for South Africa's exports going through the roof. This will result in an influx of foreign currency into the market, so contributing significantly to a stronger currency. Also, as previously mentioned, the South African Reserve Bank will raise interest rates without very much convincing. And this is because as inflation increases and the rand is at more risk because of rising interest rates in the US and in the Eurozone, there's going to be much more pressure to make sure that the rand doesn't depreciate. So interest rates higher, commodity prices certainly will contribute to the rand stability. But as we look to 2023, we're actually expecting a bit of a reversal of this trend. As the election of 2024 gets a bit closer and as commodity prices ease, we are going to see the rand probably begin to fall, probably the first half or especially the second half of 2023 to closer to 16.5 or 17 per dollar. So the outlook for the rand is less certain the longer we look ahead, and we're likely to see much more volatility and depreciation, especially in 2023.
Yeah, Matt, I understand that. I mean, I know what the Naira is going through now with a pre-election year. That always has a whole lot of impact. Well, thank you so much, Practice Leader, Sub-Saharan Africa, with a front of you. Thank you so much, Matt Kiniga. Enjoy your weekend.
My pleasure, you too.